This isn't always a red flag. During this step, consider asking the sponsor.
Welcome to Requity Insights, a channel dedicated to documenting our journey to 100 world-class communities.
Welcome back to Requity Insights. In today's episode, we're diving deep into the process of selecting the ideal sponsor for a potential commercial real estate syndication. If you're an investor seeking passive income through real estate syndications, this episode is a must-watch. Let's embark on a three-part journey to understand the process of sponsor evaluation and selection. Part 1, the sponsor. Before you take the leap into a commercial real estate syndication, it is crucial to thoroughly examine the track record of the sponsor or general partner. Start by researching the types of assets that they specialize in and manage. Your risk tolerance plays a pivotal role in shaping your investment decisions. Therefore, be clear about your risk threshold before evaluating potential sponsors and opportunities. Your risk tolerance will also determine your preferred investment strategy, whether it be core, core plus, value add, or opportunistic. Whether you choose to invest in a stable multifamily apartment building, a higher yielding RV campground, or an ambitious development project, each profile carries distinct return expectations and associated risks. During this step, consider asking the sponsor, how many successful deals have they executed? Have they completed any full cycle deals, either through a sale or refinance? What the performance history of the sponsor's previous deals was, and if they were willing to share documentation on those deals. How many deals in this specific asset class have they acquired? How familiar are they with the target real estate market? What percentage of the investors are actually repeat investors? And how do they communicate with their investors? Prioritize communication. Be sure to ask the sponsor how often they communicate with their investor base. What is the frequency of their reporting? If they have a newsletter or blog, and what you can expect in terms of general communication. As an added point, when they face challenges, how do they communicate on them? Frequent and consistent communication should always be a priority when evaluating a deal sponsor. Part 2, the deal. Before aligning your investment goals with the syndication project, you need to grasp the sponsor's investment and exit strategy, along with their underlying deal assumptions. Dive into why the sponsor is pursuing a specific strategy and whether it's backed by their past experience. Sponsors' assumptions should be founded on past market performance, current industry dynamics, and relevant trends and demographics. Syndicates compute target financial returns and standardize financial statements according to informed assumptions. To avoid making a bad investment, compare the targeted or standardized returns with the sponsor's financial returns on previous investments. Here is a good opportunity to ask the sponsor to share past deal performance, as well as ask them when an overall deal or assumption failed to meet expectations. This isn't always a red flag. Any sponsor that has been in business through multiple deals will likely have some blemishes or aspects of the business plan that did not go as planned. It's just important to understand what happened and how they course corrected. You'll want to know that even when a project hits a snag, the sponsor was committed to providing timely and accurate information to investors. Explore the sponsor's investment exit strategy. Some sponsors are long-term holders while others have 3 to 5 year exit plans. Lastly, understand the potential tax benefits tied to your investment. These can vary based on asset class and their corresponding depreciation schedules. Consider asking the sponsor, what did they really like about this deal? Why is this market a good market? What is their business plan in accordance with the investment strategy? How long will invested capital be tied up? How much and what type of value-add renovations are going to be done? How do the current market rents compare to the forecasted rents? What is the current vacancy rate and loss to lease on the property? And lastly, what kind of foreseeable risks are associated with the deal? Part 3, the distribution waterfall. In the realm of real estate syndication, the private placement memorandum, or PPM, is a document you'll become more and more acquainted with. We speak more in depth about the document in our video on real estate syndication legal documents, linked below. Much like a stock investment prospectus, the PPM outlines the details of the sponsor's project and reveals the investment distribution waterfall. The distribution waterfall explains how capital is shared between the syndication sponsor, general partner, and the passive investors, the limited partners. This breakdown covers the investment's timeline and anticipated disposition. A deeper dive into the sponsor's financial stakes and expectations offers insights into their priorities. Sponsors are generally financially compensated via a one-time acquisition fee, a monthly asset management fee, a monthly property management fee, and the potential for a future promote upon meeting certain financial metrics, usually a stipulated preferred return. Be sure to ask the possible sponsor to disclose all their fees, as some groups may charge additional ones, such as refinance fee or a disposition fee. Most sponsors will also directly invest in a deal, just like the LPs. Sponsors usually invest a portion of equity in the deal, around 5 to 10%, emphasizing their commitment and confidence in the venture. This is also how the sponsor shows that they have skin in the game alongside their investors. The remainder of the equity capital comes from the LP investors. A project's entire capitalization is the sum of the GP equity, LP equity, and bank debt. Another way to better align sponsor and investor incentives is to use a promote structure with a preferred return. In other words, an investor is entitled to a full return of the invested capital plus an additional return known as the preferred return. Above the preferred return, a sponsor and investor will participate in a profit split known as the promote. Think of this as the sponsor's performance fee, as they are only entitled to this fee if the project performs above a certain threshold. At the end of the day, everything comes down to performance and alignment of interests between the parties involved. The closer those interests are aligned, the higher probability you have to be taking part in a well-structured syndication. Consider asking the potential sponsor if the general partners are invested in the deal alongside their limited partners, what the compensation structure is for the general partners, what type of fees are associated with the deal, what is the preferred return, what is the promote percentage, and if it's in favor of the limited partners, it generally should be. What the distribution schedule for limited partners is, it could be monthly or quarterly, and what happens if they can't make the projected cash flows or returns. Besides finding and acquiring a good deal, the sponsor is perhaps the most critical factor in a real estate syndication's success. So it's important to work with somebody that is highly qualified and has a proven track record. When investing in syndications, be sure to understand who you're working with, what they're responsible for, and how they plan to execute on the project's business plan. As a passive LP investor, your decision-making authority is very limited after you make your decision to invest. For this reason, put in the time up front to learn about your new investment partner, as you'll be spending the next 3 to 5 plus years in this relationship. Remember, you are investing into a partnership, and you should feel good about the team, the asset class, and the specific deal. We hope you enjoyed today's episode on how to choose a syndication sponsor. If you found the content valuable, please don't forget to like, share, and subscribe. We'll see you next time.
Thanks for tuning in to another episode of Requity Insights, hosted by our team at the Requity Group. You can find recordings of all shows along with our opt-in form to set up a call and view future investment offerings on our company website, therequitygroup.com, also listed in the show notes.